Hello, trading is closed on August 6th, 2019. We'll go over our calls. Last night, futures were down about 27.80 or so when I was making my video. I said there was a target of 28.53.54. Looked out of reach to me. Said it was an increased risk of failing, but it did print and there was support right under it. All we saw was a pattern had the early low. We got that. You actually could read it either way. I didn't have a wave count that said the drop was over. We had these very exuberant downside targets, but it's just a possibility. It doesn't mean that it has to print. Lots of numbers work. We had a buy signal today, and that's already played out. Well, here's our volume spike. Here's our bar completely under the lower Bollinger Band. These are all typical of market lows. The original idea, we're looking for the end of wave blue C. If it's equal in length to wave blue A, you get around 2802. And after today's action, I think that remains a reasonable target. It's not the only target, but I think it remains a reasonable one. Well, tomorrow look for the pattern with the early high. Typically, it has an early high and a late low in the final hour. It's usually a down day, but if it closes up, it's usually a rally early the first hour or two. We have the volume spike we showed. The NASDAQ McClellan oscillator and put call ratios are all reversing from their Bollinger Band extremes. They're all compatible with a market low, but I can't find a wave count that says the drop's over. This count might not be right, but if it is, one more drop ought to complete wave blue C, and that ought to do it. Now, this pattern Monday normally is a positive day. When it's negative like this, before long, that low should fall. But futures were down sharply overnight, then we recovered and opened in the black. My friend, the late Bill Blount, used to call this a Peon trap, meaning the Europeans who shorted down in the hole there were trapped in their shorts and they had to cover. All this buying is from people who went way short in the overnight session, and this morning they were hurting. Pattern calls for a day-long rally, and the low we saw last night does not have to be seen during regular trading hours. It was the same formation we had the night President Trump was elected. You remember, futures were locked, limit down, and when we opened, we actually opened positive, and that marked a major low, which hasn't been seen in regular trading hours since. So if we drop to 2802 and wave black 5, we'll have a Fibonacci relationship to wave black 3, and this whole pattern will be equal. This large blue C will be equal to the large blue A in length. Now, just because that number works, it doesn't mean other numbers don't. But I think it's a reasonable number. It's a number I'm going to be looking for if, in fact, this counts right, which we don't know yet. But in any event, if this is right, one more drop ought to do it, and we have signs compatible with a significant panic low in the market. And if that's true, once wave blue C ends, we should start wave round 3 up, and third waves usually reward those on the long side in the bull market. Looking for the pattern with the early high, hoping to see one more down move, perhaps ending at 2802, followed by the rally resuming. And that's today's call.